Hello, this is Dan O'Brien with Kansas State University. I'm an extension agricultural economist here with Kansas State. I want to talk a little bit about U.S. ethanol and biodiesel trends and prices and profitability. This presentation is dated May 27th. I'm looking at information as of the completion of the day yesterday, May the 26th. And I think looking at weekly closes last week, we still have pretty strong corn markets feeding ethanol plants. You can see the Kansas basis bid is range of 1400 July to 20 over. And other than Indiana, that's as strong a basis bid at ethanol plants as you see across the country. That'd be for corn. For grain sorghum, we have 10 over bids. Again, 327 and 3/4, as opposed to corn at 337 3/4. So again, pretty strong demand pull for grain sorghum as well as corn into Kansas ethanol plants. Pretty strong markets for distillers grains. I think what's occurred is that we'd had the run up in DDGS prices at the beginning. That occurred at the beginning of the COVID-19 concerns in the U.S. Ethanol industry. And with that, then we ran up from about, well, in Kansas, about $140, $145, $150 per ton up to about 200, and now we've gone back to where we were prior to the run-up. So interesting to watch that part of the market. Ethanol prices have recovered some at the low. Ethanol futures got down to about 82, 83 cents. Are back up now to about $1.17. So some signs of recovery. Ethanol versus RBOB prices. Take note that we had quite the run starting in early March. We had about $1.28 ethanol futures, lead futures, to $1.54 RBOB gas. Then when the COVID-19 issue hit, kaboom, we saw in essence a loss of $1 by April 1st on RBOB gasoline futures. Ethanol had gone down some too, to about 84 cents. The ratio of ethanol to RBOB is about 1.5. Since then, got to the 1st of May, I've seen some recovery in both of those products. Now we have a ratio of about 1.3, more recovery as of May 22nd, about $1.17 again. Ethanol futures about $1.05 RBOB, and so have gained. Well, I guess you'd say we're in the process of recovery and returning to more normal price ratios. And we've started to see some improvement in gasoline and diesel prices, but just at the very beginning of any recovery there. Would say also that in terms of U.S. ethanol plant capacity, if you look on the Renewable Fuels Association site, latest information available as of May 26th, in essence, we're looking at about a 50% drop-off in ethanol production capacity, just a little less than that, and that's reflected in these numbers here. So we still have plant capacity that could be going forward, but a lot of it sitting there idle yet, waiting to come back online. And you can see that in these numbers for 2019 and 20. We did see a fall off for sure in early April in terms of U.S. ethanol production. Corn usage dropped off as well. But now we're starting to see some recovery in all of that. You can see that the stocks of ethanol had dropped off, and and as that had occurred, we started to see again the market price for ethanol move a little bit higher again. Some improvement in gasoline demand. So all that worked together. We're starting to work together to help that industry recover some. When you look at the profitability of ethanol plants, you can sure note the DDG price run up that happened. But again, that short-term run up has dissipated. We have seen corn prices move sideways though, April into May. So we'll see. There'll be other planting season, overall supply demand factors that come into play on that. For profitability during May, by our numbers, using an ISU ethanol plant model, plugging in numbers up through May 22nd, using the weekly reports available, you have May production cost estimated about $1.16 per gallon, the price $1.03. So the losses at 13 under. The surprise to me is that when you go back and look at April, we actually are looking about 25 cent loss. Now, I think early in the month, there was anticipation of a much worse situation, and that caused all those plants to change their plans, etc. Literally, what they did to not take loss after loss early in that month ended up and helped to right the ship. Seemingly, by the time you look at the whole month, all their quick responses had a lot to do with the situation they're in now, where they're still losing money, but not as much as they were. Would say also that when you look at biodiesel and soybean oil prices, the biodiesel prices are just they haven't been stellar, haven't been running to the higher side. 256 last set of numbers that we have basically for the month of May in Iowa at those plants. Soybean oil prices about 25.4 cents per pound, something like that. So interesting as it goes. Profitability after a run of profits, really pretty decent profits in the soybean for biodiesel plants here now for the month of May. So far, we're estimating basically a break-even position situation where the price of 256 costs just about 256 as well. By the time you look at the fine print, break even to a slight loss. So I appreciate the chance to speak with you on these issues. About once a month, we come in and do a scan of what we can see the trends are in the bioenergy industry. And after all the dynamic upheaval and change that's happened in ethanol in particular, sure good to look at things now. And also for the sake of agriculture overall, to see that apparently we're on the road to some recovery in that industry. Still not out of the woods, given all the losses that occurred, but some mitigation, some moderation in the dire situation we had in April as we're moving further into May. Thank you very much. This is Dan O'Brien, Kansas State University.